Hello dear traders and partners of AMarkets. My name is Daria. I'm the financial consultant and today we are going to discuss the situation in the global financial markets. So let's get started. Even though the epidemiological situation in some countries is improving, the COVID-19 pandemic is accelerating around the world, stated the WHO Director General at the beginning of the week. According to him, the lifting of quarantine and social distancing measures resulted in an increase in reported coronavirus cases in some countries. Market participants are worried that a new wave of COVID-19 could force governments to reimpose some quarantine restrictions again. This could hinder global economic recovery, which is still rather shaky and uneven. However, these fears seem exaggerated, as most investors are optimistic about the dovish monetary policy stance kept by global central banks to support economic recovery. The GBPUSD pair showed growth yesterday, despite the ongoing post-Brexit trade deal negotiations between London and Brussels. Judging by what is going on now, the UK is heading for the exit at full speed without a deal. Eurozone policymakers find British proposals unacceptable, accusing the UK of seeking to get easy access to the single market and its benefits, but doesn't want to comply with any obligations. Meanwhile, UK Prime Minister Boris Johnson announced its plans to rescue the country's economy. Johnson's pledged to solve problems in the social care system, build new schools and hospitals, and support local businesses. We believe that it was these promises that bolstered the pound sterling amid the release of the weak GDP report. The pound may continue to climb up in the next few hours. However, we shouldn't rule out the pullback to 1.23 till 1.2350 area first. Then the buyers will be heading for 1.2460 resistance as their next target. Recent statement by the Bank of Australia representative contributed to a brief weakening of the Australian dollar. Also, increased risk appetite helped the bulls regain their strength. Australian dollar is now trading at the beginning of the year price levels, maintaining positive dynamics amid the traders' growing optimism over global economic recovery. However, the Australian currency may resume its decline if the second wave of COVID pandemic comes. The new wave of coronavirus will produce even more powerful effect on the global economy. If this scenario takes place, commodity prices will plunge, triggering a decline in commodity currencies, the Australian dollar in particular. The Australian dollar USD pair is likely to maintain yesterday's upward momentum. The breakout of level 0.6920 will be a signal to buy this asset. Then bulls will turn their attention to 0.6940 till 0.6960 resistance area. So for now, these are the main trading ideas for the upcoming trading session. Thank you for your attention. Subscribe to our channel and we will do our best for you to reach success trading with AMarkets.